The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. And boy, yesterday was the main event, but today might be the main event of the week after all. Because, boy, we got quite an acceleration. The market digesting a 50 basis point cut yesterday, and overnight we take off to the upside. I kept checking that Tigers Den. I saw those Tigers and Tigresses chatting. First, they were chatting on the first move. In the Tigers Den, folks, if you haven't checked out the Tigers Den yet, get on over to the front page of TFNN. Check it out. It's $1 a year. We just do that to make sure we're verifying identities, so we keep the riffraff out. But check it out. The first one, 8 o'clock. Then you pull back, and then the run begins at about 9:30, and it didn't stop. We make a high at 8 a.m., 7:45 this morning. We've trailed off a bit, but you got S&Ps up by 85 points, 1.5% in the positive. NASDAQ 100. You look at the volatility yesterday, well above the spike highs of yesterday. The NASDAQ 100 up by 2.1%. The usual culprits, the tech stocks, the Magnificent Seven driving this market higher. The Dow peaks out at about 42,440. That's about the spike high we got at 2 p.m. Eastern Time. We're just off that price level. Dow up by more than a percentage point, and the Russell up by 2.2%. And we were higher than that, right? Russell was up more than 3% just in the last hour and a half. 2 hours, 7 in the morning, 23.05 for the Russell. Bitcoin, the ultimate growth asset, 63,000. Bitcoin, crude, back above $70, $71 for the price of crude. 70.88 to be exact, up $1. Now, we got some interesting action going on yields, which is going to drive some of the currency action. And of course, that's going to drive some of the commodity action. Okay, so we jump over first, before we get into gold, we're going to go yields, currencies, and then gold, commodities. Okay, check out the action. Talking to Jacob early this morning. It's so interesting, to put it for lack of a better term, right? You get 50 basis points. And what does the market say? The market says, you know what? Yields deserve to be a little bit higher today than they were yesterday. How does that translate? Well, the way that translates, folks, is that this market was priced for even more cuts coming down the line than maybe they potentially even got. Put that one in context, right? We got the 10-year right now sitting at 3.76%. Now, there's two sides of this, okay? The first side is that, okay, maybe the market had even more cuts priced in than they're potentially going to get. Chairman Powell said at one point yesterday, they come out with the decision, 50 basis points at 2 p.m. Eastern Time. 50 basis points. A little bit of a surprise that there was a live meeting for the first time in a long time, as in the market did not have it figured out. Was it going to be 25? Was it going to be 50? The market thought it was going to be 50, and it was right. And what happens is they go 50, but Chairman Powell during his press conference says, do not interpret this as the set forth path, right? This is not, we're not on this path that's 50, 50, 50. I'm generalizing, okay? But he said, we've started with 50. We've started, and the data is going to determine the path. And maybe that's where the market was priced to leave in a little bit more, to say they penciled in at least a quarter point in cuts for the final two meetings each coming down the line. So that would be 1 full percentage point of cuts from the meeting yesterday, and the 2 more we have to follow this current year. And maybe the market was thinking more, because the market's priced for more, for sure. So what do we have? Interestingly enough, right, is we have yields actually rising with, as I mentioned, the 10-year sitting at 3.76 right now. You've pulled back to 114.19 right now. You see the spike where we were yesterday, right? Initially, it would make sense. Oh boy, the Fed cut 50 basis points. Rates are going down. We're going to spike higher in price, which is going to mean lower yield. No, that's not the case. Not always, right? I mean, it's almost like sometimes they could tell you what was going to happen. What if I told you yesterday that the Fed was going to cut by 50 basis points and the 10-year was going to go up by 10 basis points? How does that work? Well, that's what's happening right now. There's your 10-year. You jump over to the 2-year. we got the 2-year moving as well. You're actually right back to where you were. So as you can see, right, this market was priced for what we got. The risk was on the other side in terms of yields. Now you jump over to the dollar. As we've seen yields rise, the dollar's basically right where you were prior to that number yesterday. You're sitting right now at 189. You got all the way in the overnight session to 101.46. You traded down almost a full dollar, and now you're right back to where we started. And of course, when you're getting that type of volatility in the dollar, that's going to drive some of the action in the gold contract. So originally, gold was getting quite the acceleration. You give it up a bit, you're bouncing again. You're still sitting at 26.05, all-time highs at 26.27 yesterday in that gold contract. You put things on a daily, and yeah, pretty lofty numbers on that gold contract, just sputtering at 26.04 so far this morning. We jump over to the volatility index, the VIX. Quite the spike on August 5th. We get another spike in the beginning of September. And now it looks like we're out of the woods for right now. 1648, right? Look at the volatility yesterday. We're coming back to the lows of last Friday. And we got an S&P that is accelerating and up 95 points. 95. Lightning McQueen, if you're familiar. You got kids in the house? Lightning McQueen, 95. That's right. And there's your S&P bar. You talk about it, man. Right? Whew. When they talk about buying the dip, that August 5th, buying the dip, right? You buy that dip at 5,200, you're up more than 10% right now over the span of 6 weeks in the S&P. That's why people love buying the dip. Excuse me. Okay, we jump around to some of the headlines, and we got plenty today, but I'm going to kick it off with that FedWatch tool. So it's interesting, right? Now, we're past the September meeting, of course. Let's go out to the next meeting. Now, what's interesting here is, okay, now, remember, for the longest time, we're just going to quote the lower bound of their range. The Fed was at 5.25% to 5.5%. That was their range. We'll call that 5.25%. That's where they were, okay? They're now at 4.75%, the lower bound of their range. Technically, they're at 4.75 to 5% is their range. We'll just quote the lower bound to make it easy. So the Fed right now is at 4.75. For the next meeting, the market right now is pricing in about a 2-to-1 probability that they're probably going to cut by 25 basis points. Okay, so you got a 32% chance that they cut by 50 basis points from where they are. You have a 67% chance they cut by 25 basis points. You go out to December, gets a little bit more interesting, because by December there is a 50% probability that they're going to go 75 basis points over the next 2 meetings, okay? There's only a 35% chance right now that they're going to go 25-25. The market is still priced for dramatic cuts coming down the line. Now, you want to get even more interesting, right? Let's go out to March. Now, again, we're quoting the lower boundary, which is the left number here. We're at 4.75 right now. By March, a full percentage point from where we are right now, 18% chance only. 1.25%, again, from where we are right now. And all things considered, we shouldn't really fear the Fed coming down to 3.5 to 3.75, right? Because that's probably still restrictive, depending on how much growth you have in this economy. You're talking about a 3.5% number there. Nonetheless, you see 31% chance by March that we get an additional 1.5 percentage points of cuts. We'll finish this up. We'll talk some equities, folks. We got some earnings. We got a lot to talk about. Don't go away. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got markets continuing to climb right now. Put it back on a 5-minute chart. We're pushing highs. 57.76. 57.76. Up 96 points. That's 1.7% in the S&Ps. NASDAQ 100. We're approaching 2.4%. The Dow's only 7,500 points away from 50,000. You don't need your 30,000 Dow hat. You don't need your 40,000 hat. Dow 50,000 coming at you. We got a long way to go, but nonetheless, pretty remarkable numbers, especially, all right, you want to go big picture. How is that even real? I'm looking at this. I was going to go back. The Dow was at 6,000 in the year 2009. I mean, S&Ps were at 660, right? You're approaching it. Just bonkers numbers, man. It's remarkable. You're going to hit 50,000. Dow was at 6,000. You peaked out in 2008 with the Dow at 14,000. Remarkable. You want to see some bonkers numbers? Yeah, we'll put on the NASDAQ 100. We'll back that number up. How about 800 to 20,000 in the NASDAQ 100, man? This market, my goodness. And then you take a look at the S&P, and what was that low? 665, I think? 665 in 2008, and it's been a run. We're pushing 5,700. Pretty remarkable numbers. All right, we jump around. So some of the biggest dogs out there. We start with Apple. Apple shares, you're going to get a lift by about $5 in the pre-market. Look at everything's going to be huge. Upside right now when you get the NASDAQ 100 up almost 500 points. Amazon above 190 this morning. You jump over to Microsoft shares. Microsoft trading at 438. The other thing going on with Apple, we'll talk about T-Mobile. So they're selling more iPhone 16s than they did the iPhone 15. So a little bit of contrasting data. We've been talking about it. I would be careful of Apple, man. All right, I'm not the only one in the boat that was thinking about going super cycle. I've been talking about it, man, but I am not the only one in the boat that was thinking about going super cycle, upgrade to the 16. I'm sure they're going to sell plenty of those phones. But are they going to sell enough phones to rationalize the run? And this is the bar in Apple, okay? June 11th, that's the date that they announced the iPhone 16, the technical aspects, the fact that Apple Intelligence was only going to be operatable on certain iPhones. The super cycle was going to begin. You traded from 194 up to 220 in the span of 2 days. Yeah, and we're sitting right at that level right now. 220.69 was where we closed yesterday, and we're trading at 225 for Apple shares right now. All right, it's going to be an interesting open coming up in 9 minutes, man. This is going to be an interesting hour, an interesting day. Shaking up. We got a lot to talk about, folks. Now, first of all, talking about the Fed again, okay? I wanted to get the exact quote, and they have it in the journal article here that I was paraphrasing earlier in terms of Powell. And as they put it here, right, Powell tried to dissuade investors of the view that a half-point cut should be the default path at the central bank's next meeting in November. And here's the quote. There's no sense that the committee feels it's in a rush to do this. I do not think that anyone should look at this and say, oh, this is the new pace. Okay. Now, it's tough, though, because what are they going to do in the next meeting? They're going to go 25 or they're going to go 50 again. He was trying to make the case, right, of why they need to go 50. He was trying to make that case. He talked about how they got a couple different jobs reports between their last meeting and the meeting they had yesterday. He talked about they got that jobs report without being able to see that jobs report in the decision they made 6 weeks prior. But yeah, it's kind of going to be up in the air yet again in terms of 25 or 50 in the next meeting. And it's definitely up in the air when you look at the fact of where the Fed's going to be potentially when you look farther out. Now, I talked about this data. We'll talk a little bit more about it because we got a lot of stories to get through today, man, in terms of the action going on. But just look, as I mentioned, where the market sees things potentially by March, okay? And I stress this because the market is priced for dramatic levels of cuts right now, okay? Even with the Fed cutting by 50 basis points, but you heard, and that's where some of this comes. Don't think this is the new path, et cetera, right? That's why you're seeing a little bit of a recoil in yields, I think. And the recoil is higher, right? You lower price, higher yield. The other aspect that's going on in yields, though, is the market loves the idea that the Fed's going to come in, they're going to cut, they're going to be able to sustain a growing economy, which supports higher yields. So it's the two of them going at each other right now. But nonetheless, pretty interesting that the Fed goes 50 and we got lower price, higher yield in the 10-year, and you got the 2-year right now basically sitting right where we came into that number yesterday afternoon in terms of the yield, even though you dropped 50. But guess what? That's where the 2-year was priced for. Yeah. Expectations, right? So right now we're at 4.75%, and by March, you add these two numbers together, and there is a 70% chance that by March, the market is figuring they're going to cut by 1.25 to 1.5% from where we are right now, right? Whew. You go to July, which is 9 months from where we are right now, okay? And there is a 58% chance that they're going to cut by 1.75 to 2 full percentage points from where we are right now. 2 full percentage points. That is 8 25 basis point cuts. Did you hear me? From where we are right now. That's not counting yesterday. That is 8 27% chance. 7 of them, 31% chance. Folks, there's only 7 meetings. November, December, January, March, May, June, and July. It's every 6 weeks or so, so it's not every month. November, December, 2 left this year, 5 into next year. By July, okay, so again, 7 meetings, the market is pricing in between 7 and 8 25 basis point cuts. That is 25 every single meeting, and if they're on the 31% side, I mean, it speaks for itself, right? They could cut every single meeting. They could cut 50 in November and then cut 25 for the next 6 straight meetings. And all they would do is basically land where the market is pricing right now. So remember that when you're trying to think of where this yield curve is going, remember what is priced in. The 10-year right now is pricing in that the market thinks over the next 9 months, you're going to get 1.75 to 2.0 percentage points of cuts. The 2-year is factoring that in as well, dramatically. 2-year sitting at 104.08. All right. We're 5 minutes away, 4.5. You get the Dow pushing highs, up 510 points right now. The NASDAQ 100 up 457. And let's jump around to some of the other stories out here. You got Darden Restaurants out with their numbers, pushing higher, even though they disappointed a bit. But nonetheless, they like what's in there somewhere on Darden. Yeah, 150 to, I don't know. I was looking at these numbers. I mean, look at the headlines here, right? Earnings fall short after significant drop in traffic. I mean, what is that going to be it? That Darden and Uber are partnering to introduce on-demand delivery with Olive Garden, the first to pilot? Maybe that's enough to send that thing higher, because you actually pull up the headline on Darden, and don't trust the CNBC headlines, but you look at the numbers. Earnings disappoint. Olive Garden fine dining sales struggle. Now, you get into the same store sales, which I like the most. Olive Garden same stores, 2.9% is what they shrank in the quarter. You break it down to where they shrank, okay? Olive Garden was down 2.9, but the fine dining segment, which is Eddie V's, Capital Grille, down 6% for same-store sales. Whew, why? What's going on there, man? I love Eddie V's. Capital Grille, ooh, that's a great one. Longhorn, yeah, same-store sales growth of 3.7. All right, folks, don't go away. We're coming back for an open. It's going to be an interesting one. We'll be right back in 3 minutes.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and we got an S&P up 97 points, 57.77. How about the NASDAQ 100 up 468? All these markets even popping at the open, man. The buyers can't get enough. With rates dropping in dramatic fashion, Jerome Powell pretty much confirming that, yeah, the market is right where they're pricing it, right? There was a lot of talk, myself included. How are they going to go 50? Why didn't they go 50? Well, he gave you some of the reasons. Some of the reasons were we got 2 jobs reports that showed a little bit of weakening in between that 6-week period in between meetings, and that was enough for them to say, hey, we're going to go 50. a little bit of an acknowledgement that they were late to the party, not going 25 before, but the market was right. And if the market was right yesterday, is the market right going forward? And are we really going to get 2 full percentage points of cuts over the next 7 meetings, leading us into June, July, as I just showed you on some of those expectations? We very well may, and that's why the market is loving this idea. And yeah, we're keeping our eye on yields. We're keeping our eye on the dollar. And we're keeping our eye on gold, of course. Gold trading right now at 26.02. Markets in near record territory, we'll call it, across the board right now. And yeah, so Darden, DRI, up by 8%. Now, they missed on the current quarter. They did reiterate their full year outlook. So I guess that's what they like. Now, it is interesting, though. And I'll tell you, we got, out in Lakeland where I am, there's one mall in particular where we got like everything in that mall. All the favorite, as in we got Longhorn, you got Olive Garden. What else do we have in there? There's a Chili's, I believe, right? And what's interesting is, for a while, we were going to Longhorn Steakhouse. I'm going back like a year or two ago, post-COVID, right? Post-COVID, everything breaking back out. I'm telling you, in my experience, Longhorn had some problems. They had some great food, but quality issue. We were there one time. We got an appetizer. Listen, it's totally anecdotal. We loved it at one point. Maybe it's this one store, but it's interesting when you see these big stores like this, and it's surprising because Longhorn's, the company, is the only division to report same-store sales growth. The top performer in Darden's portfolio since the pandemic saw same-store sales growth of 3.7%. So I got a stuffed mushrooms once there, right? They usually make it pretty well. And it comes out, and it's basically a pile of shredded cheese that has not been melted on top of mushrooms. And because I've had it before, we bring the waiter, waitress over, say, yeah, I feel like, it's not how it used to be. It's not quite, whatever it is, right? They bring it back. Long story short, the manager comes out and says, oh, man, they bring over the next one, the new order. They say, listen, I'm really sorry about that. That was not how that appetizer is supposed to be made. You're exactly right. They said, we got a chef back there tonight, and he's new, and he's just not completely sure how that was supposed to be made or something like that. And I found myself saying, Jesus, pretty remarkable when they don't even have the people. And listen, that was COVID. Maybe there was an anomaly going on with workers at the time, etc. But we've been back there, and they've had similar issues. That's the kicker, which is remarkable. So, if they're the highlight there and they're having issues, because that's a simple quality control of being able to push out the same product reliably. Many of these restaurants get that done. But yeah, nonetheless, Darden trading higher this morning. All right, as I mentioned, we got a lot of articles to talk about. And where are we going to kick it off? Let's see. Okay, Bank of England. That's a big one as well, right? Bank of England, they hold off on their rate cut after the Fed goes big. We pull up the euro. We got some euro action combined with the dollar action this morning. Oop. And there's your euro action. There's the volatility for us yesterday. Volatility this morning. You get the euro right now trading at 111. And, of course, our dollar is getting a lot of action, a lot of components going into the currency action that we have going on right now. But nonetheless, you get the Bank of England holding off on a rate cut after the Fed goes for 50 basis points. So it's going to be especially interesting to see. At the same time that we're cutting, the whole rest of the world is trying to do the same exact thing. And now the U.S. is up in the ante with 50 basis points to kick things off. All right. We talked about Darden. We'll talk a little bit about the Fed. Those are the stocks that are moving. Yeah, we'll talk this one. All right. So T-Mobile. The company's selling the iPhone 16 at a greater rate than last year's model, as I mentioned. So an interview yesterday, you had the CEO said the company's seeing more sales of that iPhone 16 than last year's series. The first week was better than last year. Not only good, but better than last year. And people are buying Pros, they're buying Maxes, so they're buying up the food chain, and they're buying at a greater rate than last year. I would love to know the variables that go into how many phones are they? Do they have a special sale going on right now? I don't know if they do, but there's so many factors that could go into why, right? Versus, show me the big numbers. Are they selling the big numbers across the board? Or is T-Mobile capitalizing on this release themselves in a good business manner? And offering some type of a promo, trying to sign people up, trying to get them into new phones, whatever. And it would make sense they're going big, though, because that's the reason why to go up to this 16 on the super cycle, right? You go big, you get the Pro, you get the Max, you get the chip that's going to allow you to benefit from Apple Intelligence when it's coming down the line. But as they say here, right, AI features won't be present for the phone's first launch, with the beta version set to come out next month. But nonetheless, yeah, he's saying that they're selling more of the phones, even more than last year. Take that for what it's worth. But just like we have with yields, folks, okay, I'm not harping on Apple trading dramatically lower on those numbers, but what I am, okay, and yeah, not today, man. Everything's going up today. Look at Apple up by 2.4%. Amazon up by 1.7%. Microsoft up more than 2% this morning. Meta shares up 2% so far this morning. Google shares up 1.7%. Even if you pull back a little bit on the open there, pretty remarkable the acceleration that we get off the bat. And yeah, that Darden restaurant deal, in terms of trading higher on their numbers, we pull back a little bit. We're still up by 6%. Jump over to Uber, you're up by 2% with the market. And I talked about this story that was coming out. It'd be interesting to see how this plays, because I'm not sure how it's a differentiator. But nonetheless, Darden and Uber to partner to introduce on-demand delivery with Olive Garden, the first to pilot. Okay, so what's different here is you're going to be right on Darden's website doing all of this, right? Versus being on Uber Eats, etc. Once live, this paragraph right here, guests will be able to order delivery through Olive Garden's website and app at more than 900 company-owned locations, giving Olive Garden fans access to stress-free delivery. Stress-free. Are you stressed out when you're ordering delivery? Are you stressed out when you're ordering delivery? Because we're going to provide you stress-free delivery while guest data and insights remain with Olive Garden. So they keep all the data as well. Right? I wonder how that battle took place over the negotiating table. Data is everything these days. So it's going to be at Olive Garden's website. They're going to keep the data and the insights, and they're probably just going to push that order along right to Uber, and Uber is going to service it with the logistics network they have. It's kind of just where you're ordering it, but it is interesting that the data is part of that deal. And so is it going to be something that every restaurant has now, the ability to order delivery right on their website? And it all is run by Uber. I'm sure DoorDash might have something to say about that. But nonetheless, Uber, that's just a market move, not on the Darden number, but you're up by 2%. Jump.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets holding on to the gains. S&P's up 85 points. Yeah, a little bit of a pullback from the spike high we got, but nonetheless, you're up by 1.5% right now. NASDAQ 100, you're up by 2.5%. Look at that. You're holding the bids, man. We're trading even higher on the NASDAQ 100. How's that for a heat map of the NASDAQ 100 for you? Oh, yeah, we haven't pulled up NVIDIA. Shame on us. I knew I was missing one. There's a pop for you. If you bought the dip yesterday, you were handsomely rewarded to the tune of almost a $6 pop from where we were yesterday. You're up $5.61 right now, 4.8% for NVIDIA. And yeah, what is red on today? We got Pepsi. They are with their numbers. They are after the bell. I think I had a headline going on with Pepsi right now. I'm not sure. And who do we get? We get do we get FedEx after the bell, I believe, today, possibly? I think we might. FedEx up by 1.5%. I believe we get them after the bell. You jump over to the Analyze tab. And what are they talking about? So you got about a $20 move. There it is. So we get FedEx numbers after the bell tonight. And that's a decent move for FedEx. $20 in either direction. If you want exposure through the end of the day tomorrow, you're talking about a $21 move in either direction, which means at the money puts or calls are basically going to be half of that number. So you're talking about $10.50. So if you're making a directional option trade, you're buying a call at the money or you're buying a put at the money, you're going to have to make about $10.50 of movement before you begin to break even. And what is that? Yeah, that's about a 3.5% move on FedEx after the bell. And yeah, it's been quite a run for FedEx. Higher highs, higher lows, and you're pushing the highs of the year. Right now, FedEx up by 1.5%. All right, we jump down the line in terms of what else we have going on in this market. Let's take a look at some of the equities moving. AT&T down by 2.3%. Yeah. We got a couple things going on with AT&T for the headlines out there. They're going to pay a fine. They're going to remove lead-containing cables from Lake Tahoe. I saw that story out there yesterday. Not sure that's what's driving it lower this morning. But you do have AT&T trading lower. What do we have? I believe I saw them in an article somewhere. All right. And forgive me while we jump to what else we have going on in this market. Yeah, this one's an interesting one. So JetBlue, they're going to open airport lounges in New York and Boston in a battle for big spenders. All right, and I was just reading that, this is becoming quite a battle between these airlines and the ultra posh clubs that exist at the airports around the nation. First airport lounges in more than 2 decades of flying. Yeah, and they're going to launch a premium credit card to go with it. The first clubs are going to be at JetBlue's hubs in New York, followed by good old my hometown, Boston. Would make sense. They have a premium credit card to join the rest. And yeah, they're going to have an 8,000 square foot lounge in Terminal 5 of New York's JFK Airport and an 11,000 one at Logan coming up shortly after that. Yeah, JetBlue, the stock. I don't think lounges are going to save this equity just yet. You're trading at 583. You're up by 1.8% today. That's your weekly. That's your monthly. Chopping around near all-time lows. 281 back there in 2009. You zoom in on the action. We hit a low of 342 last year, and we're trading right now at 582. Put it back on a daily. We'll take a look at some of the other airlines. As this market fades a bit, S&P's still up by 75. American up by 1.2%. Delta up by 1.2%. Let's see how some of the banks are doing today. You got Bank of America up by 1.4% right now. Wells Fargo up by a percentage point. JP Morgan, what's going on there? You're flat. Ooh, a little bit of a give back on the open for JP Morgan. Check that out, from 210 to 207.61 for JP Morgan. Yeah, and how about Citi? Citi up by 1.3%. Yeah, Amazon up by 1.7%. NASDAQ holding it pretty well right now, up by 2.25%. S&P's up by 1.3%. You do see that we give up what? Almost 30 points from where we were on the open, 57.80 to 57.53. We got to keep our eye on yields. Probably the most interesting story going on right now is you have higher yield. We're recoiling a bit. We're back up to 114.23 right now. But yeah, nonetheless, pretty interesting action following a 50 basis point cut. Ah, there we go. I knew I saw a story out there. That's the problem. They're losing a Pepsi executive. Yeah. Target names Pepsi executive Jim Lee as CFO. So maybe that's a little bit of some of the negative action. 25 years of financial strategy and business experience at Pepsi as deputy CFO. Let's see how the retailers are doing. Target up by 1.2% right now. Walmart shares. Ooh, what's going on with Walmart? Walmart's been on quite a run. Walmart up, negative by 0.3%. Check out some other equities. Disney right now up by 1.2%. We keep our eye on Uber, up by 1.7%. Darden following their numbers, up by 7.4%, making a deal with Uber. And the market up by 78 points. Yeah, Amazon is introducing their AI assistant for third-party sellers. It makes sense that this is just the way it's going to be. It's all coming. I was watching some videos last night of completely AI-generated videos. You know, the movie business is just going to change instantly. You're going to have people that can create movies in their single, 200 square foot office. Man, you got a single office with enough computing power, you're going to be able to create everything on AI that you need. Now, yes, there's still going to be movie stars, I'm sure, but everybody everything beyond a few stars maybe is all created. I don't know, but it's coming, man. And especially when it comes to productivity, so it would make sense. They're launching in beta for select U.S. sellers before introducing it more broadly later this year. I mean, it's already almost October. All this stuff is coming down the line right now. Yeah, so Amelia, artificial intelligence tool designed to help third-party sellers quickly resolve issues with their accounts and fetch sales and inventory data. Right? It's going to be important. It's going to help us break down everything we do. All right. What else do we got pulled up? Yeah, we talked through those. We got the Bank of England we talked about as well. Yeah, let's talk a little bit more Apple. Why not? So, Apple gets their warning. This was yesterday, I think I saw this, right? Well, this one's out this morning. I was reading it yesterday. Apple gets an EU warning to open up the iPhone operating system. Yeah, the EU announces efforts to pull Apple into compliance. This is going to take years to play out, but it could be a big one. Yeah, they've been warned to open up its highly guarded iPhone and iPad operating systems to rival techs and eventually risk significant fines under flagship digital antitrust laws. First time we use specific proceedings under the DMA to guide Apple towards effective compliance with its interoperability obligations. Yeah, they want interoperability. Say that one 10 times fast, 5 times fast. One of the aims of that DMA is to ensure that other developers can gain access to key Apple features such as Siri voice commands and its payment chips. It's going to be a little bit of a battle, but they're going to have to do it because they're going to want to be in the EU, and we're going to see that play out. Look at this market, man. S&P's up by 1.4. You jump over to Apple. Whew, it's not stopping, man. Apple's up by 2.8%. Apple, man, you talk about it. They're up $6 and they have 15 billion shares. You're up almost 100 billion in market cap in Apple alone. Stay tuned, folks. One more segment. We'll come back, take a look at more equities. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Apple shares up 2.8%. Biggest company in the world, just gets bigger. You're approaching 3.5 trillion. 3.5 trillion, 227 for Apple, and we're just $10 away from that all-time high of 237 made out there in July for Apple shares. Can't help but check back in on some of these techs. Amazon pulls back a bit, off 1.5. Excuse me, up 1.5. Uber up 2.25% right now. Darden up by 7.5% right now. Pepsi in the red by 0.25%. And yeah, FedEx with their numbers after the bell up by 1.6%. And we'll finish it up with mortgages and interest rates. Why not? We jump over to the 10-year. Let's take a look before we jump to this article talking about mortgages. We got the 10-year right now. Back to the lows of last night at about 10 o'clock. You're trading down 12 ticks at 114.22. And what this article from the Journal is talking about, I'll give you the headline. Should you refinance your mortgage? The Fed's big cut changed the math. Well, not yet, but it may in the future would be my take. But it is interesting. I want to just, with rates just above 6%, that's where they are right now. Now remember what rates did on the heels of this. The market has priced in this cut. Do not expect mortgage rates to drop 2 percentage points over the next year, even though the market thinks the Fed is going to cut 2 percentage points over the next year. The reason why is because that's already priced into the market over the next year, right? And it's already priced into where we are right now. And yes, it could go lower. It will go lower if the Fed cuts by 2 percentage points over the next year, but it's not going to move a full 2 points because a lot of that is already priced in. 4.2 million borrowers could lower their interest rates right now by at least 0.75 percentage points. Remarkable, right? Rates just above 6. So that means these are the people who bought a house in the last couple of years or refinanced or got a mortgage when rates were at about 7%. And there's your number. And look at, this is the number of mortgages where a refi could lower your rate by at least 0.75 percentage points, okay? You got an uptick here. We might actually see more than 4 million people. Now, that's a far cry from when everybody could refinance at 0, but nonetheless, those are stark numbers, man. Already at 6%. Think about what that number is going to do when we get even a little bit lower on yields potentially. Folks, thanks so much. It's an interesting day. Don't go away. Basil Chapman's up next. Have a great Thursday, folks, and we'll see you tomorrow. Thanks, folks.